Right. Good morning, everyone. We'll go ahead and start. There are probably folks still joining, but there's a lot to cover, so we can go ahead and start the webinar. Good morning. On behalf of the Illinois Power Agency, I'd like to invite you all to the Power Hour webinar on elective pay, clean energy credits for tax-exempt entities. My name is Megha Hamal, and I'm the Chief Strategy and Communications Officer for the Illinois Power Agency, and I will be your host today. Special thanks to IPA Communications Specialist Tori Tartaglia for handling logistics and supporting the webinar. To get started, let's go over some housekeeping items. All participants are muted upon entry to avoid any background noise. Feel free to submit questions at any time using the chat feature at the bottom of the Zoom window. We will spend about 10 to 12 minutes at the end to take your questions. And please note that today's session is being recorded, and a recorded version of the session will be available on the IPA website under Events. In considering privacy, intellectual property, and accuracy concerns, and to encourage active and candid participation, the IPA has determined that the use of AI note-taking tools will not be permitted in this webinar. The IPA will remove AI note-takers from the meeting, so we really appreciate your understanding and cooperation. Next slide. Thank you. Um, This webinar, all Power Hour webinars, I should say, are intended for general education purposes only and does not represent a legal interpretation or statement of policy by the IPA or its staff. Additionally, this forum is not intended for discussing items that are currently under petition or legal proceedings, as those fall under ex parte communication rules. And finally, if you are interested in accessing our previous webinars on a wide range of clean energy issues and themes, I really encourage you to visit our IPA website and click events. With that, I think let's go ahead and get started and introduce today's speakers. Next slide. Okay. Our first speaker is Sarah Duffy, IPA Director of External Affairs. In this role, Sarah monitors federal energy law, policy, and regulations that impact the agency. Additionally, Sarah also leads stakeholder efforts, raises awareness of the IPA's work externally, and provides policy recommendations to agency leadership on emerging energy issues. In her time at the IPA, Sarah has also served as Associate Legal Counsel and Deputy Legal Counsel. Welcome, Sarah. Our last speaker is Cassie Rowlands, founder and principal of CYR Solutions and an expert in elective pay. Cassie supports state governments and local communities on elective pay by providing education and outreach on federal clean energy incentives. Welcome, Cassie. At this time, I would like to welcome Sarah to introduce elective pay. Thank you.
Thanks, Megha. We can go to the next slide. Great. So, as many people joining us today probably know, in 2022, the federal Congress passed the Inflation Reduction Act, which included a wide swath of new tax credits for various clean energy projects. Um, those have been available since about 2023. This included a new element that allows tax-exempt entities to claim those tax credits. And even though some of those tax credits are phasing out sooner than originally anticipated due to the adjustments and amendments to those tax credits that were enacted in the summer of 2025, these tax credits are still available. And so the IPA partnered with Cassie Rowlands last year to provide additional education to these tax-exempt entities to ensure that Illinois leverages as much of these federal benefits as possible while they are still available. The IPA in particular has an interest in this because we are charged with facilitating the deployment of clean energy resources, particularly solar, at the lowest cost possible to Illinois residents and businesses. And so ensuring that we are leveraging as many of these tax credits as possible helps us achieve our energy targets at the lowest cost. We've done a bunch of outreach since November. Cassie's term ends in July, and so we are really excited to do this final power hour with everyone. We have a bunch of resources from the work that we've done over the past 6 months available on our website. You can see the link there. There's case studies from tax-exempt entities that have already received their tax credit and gone through the process. And we also have partnered with Lawyers for Good Government, where they are prioritizing projects from Illinois that are submitted into their elective pay sprint hub. And if that's of interest, please reach out to us afterwards and we can connect you with them and direct you to where you can submit your project for assistance from Lawyers for Good Government. I think that's all I wanted to cover. So next slide. I also wanted to just highlight that the Illinois Finance Authority also has bridge loans available for entities that are leveraging the tax credits. And this fills the gap between the upfront capital costs and payments required during construction and receiving your tax credit the next year, since you cannot file for the tax credit until the following tax year after the project is placed in service. So this is a great resource for those just concerned with cash flow and the timing differential between the construction and receiving the direct pay tax credit. Next slide. Great. I'm going to pass it over to Cassie, who's going to go through basically everything you ever wanted to know and didn't know you needed to know about elective pay. And we'll have time for questions afterwards.
Thanks, Sarah. Hi, everyone. I'm Cassie Rowlands. As Sarah and Mega mentioned, I'm really excited to be here today talking to you about elective pay. I'm going to give a quick overview and then I will talk more about elective pay specifically for geothermal and energy storage projects. We have worked with so many great solar projects that are using the IPA incentives and elective pay together, and I'll share a couple of those examples. But first, let's just go over what elective pay is. So you may have heard of this referred to as direct pay. They're often used interchangeably. The official term that the IRS uses is elective pay. So if you're looking up rules or regulations on the IRS website, you'll see it referred to as elective pay. It really is a mechanism for tax-exempt entities that are investing or purchasing clean energy assets to receive a reimbursement after they've placed those assets into service. As Sarah mentioned, this was created with the Inflation Reduction Act in 2022. So it has been going on for a few years now. It's been available, but a lot of tax-exempt entities still don't know that it exists or aren't quite sure exactly how to access these tax credits. Like Sarah said, these tax credits have been around for a long time, primarily for the private sector or for individuals, but this new mechanism allows tax-exempt entities to use these tax credits for the first time. So the process is to place a project in service, go through an online process on the IRS website, and then submit a federal tax return, and then you will receive a check from the IRS for the amount of the tax credit. We cover a lot of the details on this process and the rules and regulations around using these tax credits in a webinar posted on the IPA website that we recorded a few months ago. We did one for eligible entities and we did one for approved vendors. So we really encourage you to take a look at those and look at the fact sheets and FAQ on the website because that'll go into more detail if you are in the midst of pursuing an eligible project here. A couple things to note, tax-exempt entities will claim the commercial tax credits, not the residential tax credits. So I know a lot of the residential tax credits for things like solar and other types of projects at your home expired at the end of last year, but the commercial tax credits, as Sarah said, are still available. And so those are the ones that we're talking about here today. You can combine these tax credits and the use of elective pay with grants, loans, and other types of funding. There are some restrictions you want to look out for, and we cover that in the previous webinar as well. Depending on the type of project that you have placed into service and the tax credit you're claiming, entities can expect to be reimbursed for about 30% or more of project costs, and I'll talk about that for the different projects I'll talk about in just a few minutes. It's also important to know that these tax credits are not capped and not competitive in most cases. So you can claim these tax credits for as many projects as you place into service within the timeframes that they're available. And those have changed, but there is still time, which is part of why we wanted to have this webinar today. Couple of other pieces to note. Tax-exempt entities have to own the energy property, so for example, the solar panels, in order to claim the credit on that property. They cannot be leasing the panels or the system, and they can't be entering into a power purchase agreement model if they want to claim the credit. Secondly, we know a lot of folks are using grant dollars to pay for these projects. If the project is 100% entirely covered by restricted grant dollars, then the entity cannot claim the tax credits via elective pay. We cover that rule. It's called the no excess benefit rule a little bit more in the previous webinar as well. And then there are deadlines for these tax credits. They are time bound. The deadlines really depend on an entity's specific tax year, and so they really are determined on a case-by-case basis. But in general, it's a little too late now to claim these tax credits for any projects that were placed in service in 2024 or earlier. In a lot of cases, the deadline may have passed for some entities who placed projects in service last year in 2025. But if you think you could still qualify, please feel free to reach out to IPA and we will find a time to discuss with you if you're still eligible to file for your project. We also can talk through any of the requirements or rules that I've mentioned here or in the previous webinar if there's a little bit time left to do some one-on-one consultations. So please feel free to reach out. So looking at elective pay generally, who is eligible? Entities that are eligible are local and regional governments, any divisions of those governments, such as public school districts, transportation, water, or housing authorities, municipal utilities, or other branches of those public bodies. Community colleges and public universities are also eligible, nonprofit organizations, rural electric cooperatives, and houses of worship. These are just the most popular ones in my experience that are taking advantage of elective pay, but there is kind of a broad catch-all category there listed at the bottom. And there's a really helpful IRS frequently asked questions on eligibility on the IRS website. So I've included the link there if you know of any organizations that might fall kind of between these categories or into a different category. You can check that out afterwards once we post the slides, and that link will be clickable for you. So not all clean energy purchases that you think of are actually eligible to claim these tax credits through elective pay. There's only about a dozen tax credits that can use elective pay. And so I've linked at the bottom an IRS fact sheet that lays out all 12, but I'm going to focus on a couple just here today that are some of the most popular. We know for sure that solar energy storage and geothermal heat pumps are all eligible to be used with elective pay. And solar specifically has been hugely popular with tax-exempt entities purchasing these systems and receiving reimbursements through elective pay. We have been working with a number of entities that use the IPA programs and pair them with the tax credits to receive even more funding. So we spoke with Jonesboro Elementary School, who installed a 300 kilowatt solar array. They placed it in service in December of 2024. The project cost $982,000. In year one, they received $393,000 from Elective Pay by claiming the investment tax credit. They then also received other incentives through the Illinois Shines program and utility incentives to total $500,000 just received in the first year. So they've got 50% of the project paid for just in year one. They also reported monthly electric bill savings ranging across the year anywhere from $1,600 to $6,500 a month. So, of course, as you can see here, their superintendent really felt like this was a great option, a game changer, and kind of a no-brainer. So, this is just one example of how solar has been working really well with elective pay. And one more example of a church, Carbondale Unitarian Fellowship. They installed a 12.4 kilowatt solar array on their church, placed in service in February of 2025. They filed for their tax credit, the investment tax credit, and received their elective pay amount of $14,872. They paired this with, again, Illinois Shines incentives, and that they reported that that reduced the cost of their system to roughly $4,000. Their energy bill savings, they anticipate about $1,000 annually. So they were really happy with that result. And again, just another example of how elective pay has been working really well for solar projects to date. Some of you may have heard that the HR 1 bill that passed Congress last summer changed the tax credits for solar and for wind. Focusing here on solar, these are kind of the summary of changes that you need to know. First off, if you begin construction after July 4th, so coming up very soon, then that project has to be placed in service by the end of 2027. If you started construction before July 4th of this year, you do not need to place in service by the end of 2027. You generally have 4 years to place in service. So projects that are starting construction after July 4th are really on an expedited time frame. If you have very small projects, talk to your installer about whether or not they'll be able to place in service before December 31st, 2027 to make sure you can still be eligible for the tax credit. As I mentioned, the tax credits pair perfectly with the IPA incentives. They really are in addition to the tax credits, so you are getting even more money. For solar, elective pay entities generally are claiming the Section 48E investment tax credit. There's a couple of regulations to know about, and again, cover these a lot more in detail in the previous webinars we recorded. But just know if your project is 1 megawatt or larger, there are some rules that apply in order for you to receive the full 30%. Those are the prevailing wage and apprenticeship rules. And there are rules that apply for you to even get the credit at all. Those are the domestic content rules and the prohibited foreign entity rules apply to any project of any size. That is not limited to 1 megawatt or larger. Sarah mentioned our partners at Lawyers for Good Government. They have incredible resources on all of these rules and regulations. So I've put the link there and encourage you to take a look at their briefing memos and webinars on all of these topics. So I want to spend some time today talking about the other types of projects that you can claim these tax credits for. Geothermal heat pumps are a type of technology that not everyone is really familiar with, but we really want to focus on this because the tax credit for these do not expire until 2034. So there's quite a long runway to take advantage of these federal incentives. Geothermal heat pumps are also called geothermal HVAC systems, ground source heat pumps. Generally, if they are something being installed in your home and it's being referred to as geothermal, this is what we're talking about here. Air source heat pumps, so those that you might put in the wall of your home, do not qualify. That is a different type of technology. I'll talk a little more in detail about the specifics, but again, this tax credit can be worth 6 or 30% of your eligible project costs. It gets phased down on 2033 and 2034. But again, such a long runway. Looking at these projects, there's plenty of time to still claim them, and we want to make that very clear to everyone. So geothermal heat pumps, not everyone's familiar, like I said, but this is really not a new technology. When I just quickly searched the Department of Energy Resources, their video on geothermal heat pumps is 15 years old. They've got tons of other resources. They've got helpful infographics like this one, just explaining that geothermal is really pulling heat from the ground using air or water at various depths. It does not have to necessarily be the deepest kind of option laid out here. There are shallow heat collectors, and then there are even shallower pond collectors that can bring heat into the home and circulate it throughout your system so that it is managing the heating and cooling of the dwelling. Again, we're not necessarily talking about homes here. We're talking about elective pay eligible entities, but I just wanted to provide this helpful visual. Geothermal heat pumps are very efficient, they're very low maintenance, and they last a long time. They also naturally, because you're not using heating fuel, mean that you're going to save on heating fuel costs and also maintenance costs. We are really seeing geothermal heat pumps be used often by municipalities in office buildings, fire stations, and elsewhere. We're seeing a lot of school districts installing geothermal heat pumps, and the same at colleges, whether it's community colleges or universities. All of them are using these tax credits through elective pay to get reimbursed for a portion of those project costs. So Sarah and I visited West Aurora School District not too long ago. They are a great example of using geothermal throughout their district. Their high school here is 500,000 square feet, and they installed a geothermal HVAC system there in August of 2024. All the wells are located under the practice fields you can see back here, and the project cost was a little over $6.1 million. They filed for their tax credits in September of 2025 and received just a couple months later their elective pay reimbursement for over $2.4 million. That's a huge chunk of money coming off the project costs. And this is not the first time that they have used geothermal. The district actually has geothermal at 11 buildings district-wide, and their superintendent here, Angie, reports that they are saving about $400,000 to $500,000 a year due to these geothermal systems. They really only pay for heating fuel to heat hot water for their bathrooms and their kitchens. So for them, this has been a huge win financially and a great way to save some money using elective pay and these more efficient systems. So what do you need to know if you are claiming the tax credits for these systems? I mentioned they expire in 2034, so these projects have to actually start construction by 2034. They don't necessarily have to be placed in service in 2034. These tax credits will claim Section 48. So this is different from solar and from energy storage, which I'll talk about in a minute, because those are 48 capital E. This is just 48, Section 48. Again, here, projects 1 megawatt or larger have to meet the prevailing wage and apprenticeship rules to receive that full 30% investment tax credit. Otherwise, you're only going to get a 6% credit. And the domestic content rules are need to be met for projects, again, 1 megawatt or larger. For geothermal heat pumps, you're not really measuring those in megawatts. You're looking at BTUs and maximum heating and cooling. So I've put the conversion there for those of you who want to assess the size of your system and see what rules actually apply. Importantly here, the prohibited foreign entity rules that came into being with the passage of HR1 last year do not apply to geothermal heat pumps. So that is something that's very important to keep in mind. Next, I want to talk about energy storage projects. These are not just batteries, but also thermal energy storage and hydrogen energy storage that can qualify for these tax credits. This tax credit does not expire until 2035. So again, long runway here to assess your needs for energy storage and start planning and implementing these projects. Again, just like the others, the tax credit is worth 6 or 30% of your eligible project cost, and this one does taper down again in 2034 and 2035. So energy storage can really enable people, communities, and utilities to draw electricity during blackouts, when rates are spiking, and from solar generation when the sun isn't shining. Tax-exempt entities are using battery storage when severe weather events are knocking out power, and they're able to then act as resilience hubs. I've seen a lot of houses of worship installing energy storage for this purpose, to be able to have a refrigerator that may be able to keep medicine cold, or medical devices running at the church when power is out. So being really a hub for the community. Libraries are also another one who are really acting as resilience hubs and being kind of that pillar of the community by using batteries. Right now, we are in summertime. Those of you that have installed solar and maybe used IPA programs, you're at maximum production. Don't let it go to waste. Put some of that energy into a battery and save it for any time you might need the extra backup. There's a wide variety of battery compositions. You might be hearing, like me, constantly new types of batteries under development or being researched or coming to the fore. There's also varying degrees of duration, and these are all things you should talk about with your installer. If you want to learn more about energy storage, I've put a couple really helpful links here at the bottom, some resources from the Department of Energy and the national labs. They've got a really helpful kind of 101 blog post at the Department of Energy website. And the second resource that I thought might be very helpful for this audience is Sandia National Lab did an energy storage procurement guidance documents for municipalities. So this is helping you think through how you might put out an RFP and actually start to procure energy storage assets for your municipality. Just wanted to give a bit of a visual here. So battery energy storage systems can really vary in scale. So on the left here is Pastor Glass. He installed 3 batteries at Lord of Lords Church in Detroit, so they can act as a resilience hub. And on the right, we have a whole bank of batteries installed by an electric cooperative in Arizona. So really, this can be small scale batteries for a single building or utility scale batteries to back up portions of the electric grid. Both are eligible for elective pay. Both are being pursued by elective pay tax exempt entities, and they are claiming elective pay tax credits for these projects. So just wanted to provide a couple examples here. We do know of a number of school districts in Illinois that are also installing batteries and having them as backup in case the power goes out. So what do you need to know about energy storage about elective pay for energy storage? So projects have to start construction by the end of 2035. Again, very long runway. These tax credits still exist for quite some time. As I mentioned before, for energy storage, you claim Section 48 capital E, the investment tax credit. Storage projects do have to have a nameplate capacity of not less than 5 kilowatt hours, so there is a minimum battery size here. And projects, again, 1 megawatt or larger, have to comply with the prevailing wage and apprenticeship rules, and in order to get the full 30% tax credit. Otherwise, they will only get a 6% tax credit. And they have to comply with the domestic content rules in order to get the credit at all. For energy storage, the 1 megawatt refers to nameplate capacity, so keep that in mind. And again, here the prohibited foreign entity rules do apply. So if you are purchasing a battery that is not going to comply with the prohibited foreign entity rules, it will not be eligible to claim the tax credit. So really encourage you to take a look at Lawyers for Good Government's resources on the prohibited foreign entity rules, and also talk with your installer, because that is something they're going to have to work with you on to ensure that you have a compliant system and also the documentation to support that. And now I think we've got plenty of time for Q&A.
Yeah, I'm not seeing any questions, Cassie, but we have a lot of time left, so we can maybe give a few minutes for people to submit their questions, or they can just come off mute to ask questions to Cassie or Sarah.
I had a question.
Great.
Excellent. I don't know if you can hear me. My name's Lyle Prempis. I'm with a Lauterbach and Amon. We prepare some of these 990 e-filings. We actually did the West Aurora one. But the question is on, I noted that you said that for domestic content requirements, that they are now required, if it's over 1 megawatt, that domestic content is required to get to the 30%. Is that new and different than what it was in prior um, filings? I know that 4080 is new. Under 48, you could get to 30% without meeting domestic content requirements, and then there was an additional 10% bonus for domestic content.
Great question. Yes. Yes. So previously, say in 2025, or sorry, in 2024, projects for elective pay entities that were over 1 megawatt could receive, like you said, a 10% bonus credit if they complied with domestic content rules. If projects started construction in 2025, they didn't have to comply with, or sorry, again, projects over 1 megawatt didn't have to comply with the domestic content rules, but if they didn't, they would get a 15% haircut in the tax credit amount. This is only for elective pay eligible entities. Projects starting construction in 2026, again, 1 megawatt or larger, that don't comply with domestic content are not able to get the credit at all. And this is only for elective pay eligible entities. So it is now required that projects of 1 megawatt or larger for elective pay entities do comply with the domestic content requirements. It's called the elective pay phase out. So that's kind of how the IRS refers to it in their regulations and on their website. But if you want more information, feel free to reach out and I'm happy to send those links along.
And Cassie, I
So if it's
believe that was new under HR 1, correct? So that ramp down and the new requirement that above 1 megawatt domestic content is now required, is that a result of HR 1?
Um, that's a good question. I didn't think so, but I would have to check.
Okay.
Thanks, Cassie and Sarah. There's a question from Michaela. She's asking if we have a project that for the location qualify for 70% ITC, will direct pay work for that 70%?
Yes, as long as it's using a tax credit that is eligible to be used with elective pay, then you can claim that tax credit through elective pay. 70% is a hard amount to reach, so I would just say double check that all the qualifications have been met, and that likely implies that the entity has applied and received the low income bonus credit from the Department of Energy, which is a competitive bonus credit. There's only a certain allocation of those that get awarded. But yes, if it's a tax credit that is eligible to be used with elective pay and you've kind of done your due diligence and checked compliance with all those credits and it's eligible for 70%, then yes, it should be able to be accessed through elective pay.
I just want to clarify that in the reference to that the location makes it qualify for 70%, there is a 10% bonus for projects located in specific areas on top of the 30%, but
Right.
that location by itself will not get you to a 70% credit.
Correct.
So, Michaela, if you have questions on that, or if you're working on a project and it has been um, represented that you can meet 70% just because of the location of your project, please reach out to us so that we can clarify and make sure you have accurate information.
Yeah, that's a great point, Sarah. Also, the 70% assumes that not only are you getting the low income bonus credit after applying to the Department of Energy, but it assumes that you're in certain categories that are eligible for a 20% bonus credit under that program, where some projects are only eligible for a 10% bonus under that program. So just a lot of things to check there and make sure that it's correct.
I believe Michaela provided a comment in the chat. We also have prevailing wages, domestic content, low income area, and energy area.
Great. That's great. Yeah, I would say I think there's a lot of confusion around the low income bonus credit program. Some folks think just because they're in a eligible area for that bonus credit program that they automatically get the bonus credit. That's the case for the energy communities bonus credit, but for the low income communities bonus credit program, it's actually a program where you have to apply to the Department of Energy at a very specific point in the project's process. And then you have to receive an allocation from the Department of Energy, and then you can place the project in service. So again, just double check on all of that, just being in the correct area on the map for that bonus credit does not necessarily mean you're going to get it.
And even if you do qualify and apply to the program has been oversubscribed, I believe, almost every year. So even if you meet all of the required qualifications for that extra 10 or 20%, does not mean that you will actually receive it.
Correct. I don't want to scare people off from it. It's definitely worth applying. I've worked with a number of entities who have received allocations under it, but we just want to make sure
Maybe
nobody.
don't plan your entire project financials around the assumption that you will get that level.
Right, right.
Um, I had a question, Cassie, a prompt, I guess. So IPA obviously administers incentives for solar projects. There is a lot of um, trending increase in pairing solar plus storage.
Yep.
So can you talk a little bit about, um, you know, if you're doing both solar and storage, how does that work when applying for the tax credits?
Yeah, you have to apply for or file for the tax credits for the solar property and for the energy storage property separately. They are two different pieces of property in the eyes of the IRS. And so practical things from like when you are filling out the forms and when you're going through the online pre-filing registration process, they are treated as two separate pieces. But even just when talking with an installer, it's really helpful to try and have them separate out the cost estimates and kind of anything final in terms of paperwork and permits into kind of the two buckets of solar and then battery storage. That will just make things a lot easier on your CPA later. Hopefully, you're working with a CPA to help you with these filings and this process. But it's just helpful to have those costs segregated and to make it very clear which ones are attributed to which pieces of property, because again, they are treated as separate pieces of property in the filing. Great question, Sarah.
Okay. I'm not seeing any questions, but if anyone wants to come off mute and ask questions to Cassie, this is your chance. Oh, looks like we just got a question. Thanks, Tammy. Do foreign entity rules apply to projects started in 2025?
No, so that's a great point. I kind of made these slides under the assumption and kind of speaking to those who are have not yet started projects. So the prohibited foreign entity rules, at least the material assistance rules regarding the manufacture of the equipment, do not apply if the project started construction in 2025 or earlier. They apply if the project started construction January 1st, 2026 or later. There are other parts to the prohibited foreign entity rules, such as the entity claiming the credit cannot be a prohibited foreign entity, or cannot have certain things like debt payments to prohibited foreign entities. Those rules about the entity itself and the payments that it makes may apply to certain entities, even if the project started construction in 2025. But again, that depends. It applies based on the entity's tax year. And so it's kind of a case by case determination, but it's important to familiarize yourself with those if that might apply to your entity.
And just a quick note on prohibited foreign entity rules, because in our um, lots of conversations with entities over the last 8 to 10 months, this comes up again. The prohibited foreign entity rules are not the same as the domestic content rules that Cassie mentioned, either the ones that provide a small 10% bonus for smaller projects or the domestic content rule that is now required for projects over 1 megawatt. These are separate rules, and you have to comply with them both if you want to qualify depending on your project, either at all or for the 10% bonus.
Exactly. And another plug for Lawyers for Good Government, they explain this really well in their webinars. Domestic content rules are about where the actual equipment is manufactured, whereas the prohibited foreign entity rules look at the owner of the company or the ownership of the company, where it is owned and operated, the company that makes the goods. So a little bit
So,
different.
for example, a Chinese-owned company that manufactures, has a factory in the US and manufactures something in the US, that product would probably, for under these basic assumptions, meet the domestic content requirement, but it would not meet the prohibited foreign entity requirement.
Correct.
Thanks, Sarah and Cassie. Okay, so it's 9:42. I know we answered a couple of questions, but please feel free to reach out to Sarah and Cassie on any additional questions. We have the contact information listed here.
If
So at
possible, let me
this
ask one other
point,
question.
oh, sorry, yeah, please go ahead. Is that Lyle?
This is, yes, I just wanted to
Yes,
circle
please
back
do.
on, appreciate it. Thank you. Sorry for interrupting you there. I do want to circle back on the 10% energy community bonus and
Yes.
determine what the criteria is for when. As I know that there was a map that I used that showed, basically in the Northern Illinois area, it was generally almost all the Northern Illinois area that most of the returns that we were filing had covered. There's like a carve out for essentially Rockford area in that north central region up to the Wisconsin border. But is that different? I mean, I guess depending on when it's placed in service, that map fluctuates and it's not necessarily eligible for the 10% energy community bonus after certain dates, or the cutoffs on those?
Yeah, that's a great question. This is actually something that we were asked when we did some in-person events, so it came up quite a bit. The map does look to be a little bit outdated. It's unclear if the Department of Energy is going to be updating it. There was just some recent census tracts released by the department or by the IRS in terms of eligibility, and I'm not sure if those are reflected in the map yet. But the IRS regulations on the energy communities bonus credit have appendices where specific census tracts are listed. And so if you look up the census tract of where the project was placed in service, you can then check the appendices to see if it is in an eligible area. We added this to the FAQ on the IPA website on our elective pay page, so you can see the specific appendices that we've linked to there. We may have to update it with that most recent release, so this is a good reminder to me. But yeah, you can take a look there or reach out to us if you have questions and you want help just confirming that the census tract qualifies.
Excellent. Thank you.
Of course.
Okay. All right. So I really want to thank both of our speakers for taking the time to present and thank our attendees for joining the session at 9 a.m. on Friday. So really appreciate the cooperation and interest. This webinar wouldn't have been possible without the support of our straight stakeholders. Who take keen interest in participating in our educational webinars. As I mentioned earlier, a recording of this webinar as well as presentation slides will be posted to the IPA website. And please stay tuned for an announcement regarding the next Power Hour webinar. Thank you all and have a lovely weekend.